This is my father, Mervyn Tilbury. He's one of the hardest working people I know. And as a kid, I remember him working in a factory job, making cable ties, and a side hustle cutting grass. So he could provide for me and my mom and my 3 sisters. He'd stash away any extra money you made in a shoebox, as well as a bank account. That paid little to no interest, hoping that one day he could quit his job, working in the factory when my uncle invested some of his money in the stock market. My dad said it was an extremely risky move. Unfortunately, what my dad didn't realize is that he was also playing a risky game. Can you see where this story is going every year? My father's money was losing value due to inflation. This is just what happens over time. As more money is printed, the money in circulation becomes less valuable. This meant he was never able to quit his job in the factory. The thought of my money being eaten away by inflation scared me so much that I've made sure to invest throughout my life. As a result, not only have I, by beating inflation, but my investments actually now grow by around $17,000 a week on their own, which over my lifetime has made me millions. I'm no financial advisor, but I am someone that's been there and done it. That's why I'm making this video. It's exactly what I wish I had when I was younger. How can I make money investing in stocks? To make money, we first need to beat the inflation issue. In the last 60 years, this averages out to a rate of 3.8 per year. So if your money isn't grown by more than this on its own, then you're getting poorer by the second. In a perfect world, you would have a savings account that provides an average return of 8 to 10% every year, so that you can both beat inflation and earn some profit. Unfortunately, such savings accounts don't exist. However, you can achieve returns like this by investing in the stock market. A stock is a small part of a company, and when you buy it, you become a shareholder. And when you're a shareholder, there are 2 ways you can make money. Firstly, if the price of the stock goes up during the time, you own it. You can sell it for more than you paid. Secondly, you can receive dividends. Dividends are regular payments to shareholders. Not all stocks pay dividends, but if they do, this means that you can receive money without ever selling your stock. The magic really starts to happen when you own a bunch of stocks that grow at an average of 10 per year, because the interest applied becomes larger and larger. This is called compound interest, and I have to admit, a guilty pleasure of mine is messing around with online compound interest. Calculators, let's do one now. If you are able to invest $250 per month at an 8% annual return in 42 years, you'd be a millionaire. And if you continue to do this for another 10 years, you would actually have over $2 million in your account. Of course, if you wanted to invest even more, then that would just speed up the process. This is all based on historical average data, and it isn't guaranteed, but it's certainly been my experience. So, as you can see, the real secret ingredient. This millionaire formula is time, which brings me on to, when should I start investing? The short answer to this is as soon as possible. The younger you start, the better, as you're giving your investments more time to grow and compound. This also means you can take more risk, as your investments have time to recover if a stock market crash happens. And it will happen, it always happens. But life isn't as easy as this, as there are often things in the way preventing you from investing. So here's how I would structure things. First, you need to make sure you've paid off all high-interest debt, like credit cards. Just think about it. There's no point trying to make 10 in the stock market if you're paying 15 to a credit card company. Secondly, build up an emergency fund. This should be enough to cover 3 to 6 months of your living expenses. This way, you're not forced to sell your stocks in the event of an emergency, which can really ruin your progress. Once you've done both of these things, you're ready to start investing. If you're younger than 18, then it would be a great idea to ask a parent to open up a custodial account, which allows them to invest for you. This will give you such an advantage in the future. Your next question is probably something along the lines of, how much should I invest? When you ask an investor, they'll probably say as much as possible. However, I have a different opinion. I made most of my money through starting different businesses and only used the stock market to grow my wealth over time. I've also had a pretty fun life, from flying full-size airplanes and racing cars to competing for my country and traveling the world. If I'd invested all of that money into the stock market, then I'd have missed out on so much. So my answer would be to invest whatever you feel comfortable with. But if you want a more solid answer, then a 70-2010 rule is a pretty good guide. It states that you should split your money by these advantages: 70% on living expenses, 20% on investments, and 10% on the fun stuff. Research shows that people who invest at this level are much better equipped to ride the ups and downs of life and also get ahead of everyone else. That's all well and good. But how do I buy a stock? There are various different apps out there that allow you to invest in stocks. The key is to open the correct type of account. You'll often hear people throwing around the terms Roth IRA in the USA and stocks and shares. ISA are in the UK, TFSA in Canada, and Supers in Australia. If you don't have one of these accounts, then you're missing out, as they allow you to avoid paying taxes on your investments. But they do have limits because they're so powerful. A great thing about these investing apps is they actually give you the ability to buy fractional shares. So rather than buying a share of Apple for $190, you can invest as little as $1. I wish I had this option when I was young, as it would have allowed me to get some early investing experience without having to take any big risks. One of my favorite investing platforms is Trading 212, as they do both of these things. Since I was planning to talk about our app anyway, I reached out to see if they'd be interested in sponsoring this portion of the video. They agreed, and are also offering a free stock worth up to £100 to anyone that uses the code Tilbury when they create an account. One of the really cool things about Trading 212 is they let you practice investing with fake money, so you can get familiar with real data from the markets without risking any money. So if you're a little uncomfortable with investing, or just want to try some strategies before putting your own money on the line, this is a great way to get started. Another great feature is called pies, where you can see how other investors have allocated their money into different stocks. If you wanted to invest $100 into that pie, then it would just be split amongst the various allocations that pie creator has chosen. If you live in the UK or Europe, it's worth trying out Trading 202 because signing up is completely free, and there are no commissions, of course. Don't forget to use the code Tilbury, and you'll receive a free share worth up to £100. Or alternatively, click the link in the description to sign up and see exactly how to access the free share. Thank you very much for watching. I would be delighted to hear your comments on the video. Don't forget to hit the subscribe button and turn on the notification bell, as it motivates me to create more content like this. See you next week.